All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. We're in the afternoon period here, and have about 5 minutes for signals to populate here. There are some things that are close, but as it sits right here, this moment, there are no new signals coming into play. I'll talk about the ones that are close here. It's one of those where if you're new with us, I expect about 4 to 6 signals a week to come in, and that's what the history has been. So there'll be a few days here and there where there aren't any signals triggering, but 4 to 6 on average is what we see. Now, what is notable about that is we tend to see them clump. Right, so we'll get a whole bunch of signals in a 3, 4, 5 day period, and then it'll taper off, and then a whole bunch of signals, and then taper off a little bit, and we had reasonable number of signals here this week. In fact, the IBMs, the Microns of the world, they've already triggered here this week. So looking for fresh new triggers and possibilities out there. One of the possibilities is Twilio, and Twilio I talked about this morning. Twilio's in a really interesting spot. On the algorithm, it's triggering the trend potential going forward is very high, right? So, the probability of making a sizable move to either direction is significantly higher than it has been here of late, which is the first thing the algorithm looks at. The next thing it needs to do is confirm direction. Is it up or down? And I mentioned this morning that if Twilio closes it at lows today, it would probably give us a downside confirmation. But Twilio's had a nice little reversal. It's reversed enough that it could give an upside confirmation here, but it does need to be over 133.5. It's not quite there yet. It's still about $1 short. So if it gets there here in the next 4 or 5 minutes, we'll go out and trade that here for the first trade of the challenge. But doesn't look too promising that it will get there. There are some things that are set up, and they're set up in a way where they're not buys right here. Something like a Bank of America. It's not a buy right here. But a gap up tomorrow morning would likely trigger a buy. I can't say 100% sure, but would likely trigger a buy. A Facebook on a gap up tomorrow morning would likely trigger a buy. Raytheon here on a gap down tomorrow would trigger a sell. So there are some things that are very close, but not with the signal here just yet. And, the things that are close are, things like Raytheon here, which has been consolidating. It, like Twilio, has, been consolidating. Both have signals that, hey, trend is coming, and now just waiting for the directional confirmation on those. And then when it comes to Bank of America and Facebook, these are two where the pullback is just simply showing, okay, little pullback, can equate it to something back here at the end of January, and now looking for that next move back up into, the higher high, higher low type trend concept. Still doesn't have that confirmation. Don't know if that's going to be the pattern that plays out. But a gap up tomorrow would go a long way to confirming that. Facebook here, same type of thing, same type of situation. Had earnings. The chart has been resetting, has done a nice little reset. It's had a little pullback. Gap up tomorrow above 190. Could be looking at a very nice buy opportunity there with it. We do have some 3-7 crossover action out there. By 3-7, I mean the 3-day moving average moving up through the 7-day moving average, which is a foundation of triggers for the algorithm. But these are stocks. They have that 3-7 crossover, but they're not triggering bullish. Chevron is one of those. I talked about it this morning. EOG is another one. here that has that 3-7 crossover. But, both of these have had sell-offs to a degree that would suggest we're going to get a bounce and then another sell. So it's, neither of them are triggering bullish here. So bear with me for 10 seconds. Let me grab the final number here, see if there's any signals coming in. And no, there's not. So I'm not going to have a trade here today. I always like first day of the challenge to have a trade, but today isn't that. We do have some good potential out there for a number of things, like I showed, and we'll look to get into those tomorrow. Now, market here today, the market vibe is sitting at a 4. -4. It turned negative, turned bearish on Tuesday. -4, went down to -5 yesterday, even though the market rallied. Went down to -5. Today it's moving up to -4. It's not a big move. It's a very small move. But it is moving up on a day where the market's going down, which, has some significance, but not a heck of a whole lot. But bottom line, market opens up, sells off, big volume, right? Starts to find a little bit of base here. In fact, the market pushes into a new low here on the minute chart, and then that gets gobbled up, right? New low gets gobbled up, and this is going to be the basing area. We see that start to happen. We see the basing action, and just kind of this gradual low volume uptick, and then we get news, and you can see the volume here, right? This is on news, and this is basically U.S. President Trump, or reports out of Bloomberg that U.S. President Trump still thinks a deal could be made, is set to speak with the Chinese premier, and so more trade war or trade negotiation or trade talk stuff, drove that very fast, hard bounce in the market, came in, lasted about 15 minutes. And since then, the market's just kind of chilled out. The market, it's up near the highs of that, but, we have not seen the same magnitude of movement here this afternoon. It's been very interesting going out, reading some of the commentaries and some of the expectations and all of that out there. There are a lot of them, a lot of opinions out there, and ultimately, the market is still very prone to volatility, very prone to a heavy gap here tomorrow, and it'll be based on the next round of news, right? So it's not one that you can look at and say, well, you know what, because of this, that, and the other, the market's going up tomorrow, or because of this, that, or the other, the market's going down tomorrow. Now, this morning I mentioned the market's getting a little oversold, right? It's one of those where, oversold, we tend to either see a big bounce or, just a really kind of catastrophic drop. We aren't in an equal overbought position right now, right? We're not looking at a market that has that, in play. If we get a gap up tomorrow and we get some run up into, this kind of 2900, 2910 area, there we'd be talking about an overbought or significantly overbought, an area worth, looking at from a short standpoint, but also depending on what the catalyst, what the news is there for it. Remember, bear market conditions, when we see the metrics, when we see the market internals turn bearish, they mean what? They mean we have the biggest drops, but they also mean we have the biggest rallies. Some of the most record-setting rallies that we've ever seen in the market happened in the fall of 2007 when the market was collapsing, right? To see the Dow up 1,000 points, yeah, we had a couple days like that. And then the next day it was down 1,000. So, bigger rallies, bigger sell-offs. That's what the metrics are suggesting. We've had a very nice rally, almost 40-point rally off the low here this morning. And working off that oversold condition, and so getting there in a in an interesting spot for another gap here tomorrow. I put in the feed earlier today, right after we saw the report out of Bloomberg on U.S. President Trump. If you want to play the upside, meaning you want to look to say, hey, I want to take advantage of maybe there's going to be a resolution. Three areas I think are just really the best places to go. One, Bank of America, and could be argued right along with it, KB Home, though the options are a little bit different. But Bank of America, right? Lower Bollinger Band, finally had a nice pullback. Not a ton of volume on this pullback, right? It's not like investors are pounding down the door to get out of Bank of America. No, it's just drifting down with the market, right? So you think, okay, there's going to be some sort of reversal here. Bank of America is going to a new short-term high. Great way to play that if you like that idea of upside, reversal. Facebook as well, similar story, very similar story here, has held up remarkably well. I think Facebook has more downside risk associated here with it, but is one where we will see this trade up over 200 if there's resolution of the trade war. I don't want to use that term, but the trade talks, right? And then last, I put Alibaba. And this is the most risk when it comes down to it. But if a deal happens, Alibaba's a $190 stock. And we'll get there, and we'll get there very, very quickly. And, you can just kind of see the thing traded in, about an $8 range here today. Pretty hefty range here on Alibaba. And I expect that, this is going to be one that's going to be highly reactive, to what we see out there. Let's say you don't want to put a heck of a lot into it. You don't want to kind of take a big risk. You want to scratch a little bit of upside itch, but you don't want to take a big risk. I'm in that category. Okay, I will absolutely admit I'm in that category. But you can take a look at something like Bank of America, and take a look at something like next week's options. And you can come in and get something like a 29.5 for 60 cents. It's not very expensive. Big rally. This thing's going to triple very nicely. So, okay, great. You have about 3-to-1 risk reward there. If you look at it as, hey, you could wake up and it could be zero, right? But, if you come up to the 30.5, they're going for about 15 cents here on Bank of America. And if I come into the chart here, 30.5 is right here. That's a very aggressive, very much a, hey, you know what, everything gets solved type of play, but it's dirt cheap. And if we see a solve within a matter of 4, 5, 6 days, we can see Bank of America trading up around 31.5. And your 15 cents goes to $1. Right? I don't think it's one of those plays where you do a huge amount. It's one where you take some small gains, some small pieces of gain and say, all right, I'll put it there just so I have, have some protection or have some upside if something resolves in that way, right? And there's nothing wrong with having both, right? Nothing wrong with having both. In fact, I have, some of that on. And I also have some SPY put spreads that I put on yesterday morning. And, as we saw the market push up into that 2,900 futures level, right? And some put spreads that pay off if we see the market go on one of those just monster drops, right? Neither of them are huge positions. Both of them pay off big if we get anything like this right back here in October or this here in December, right? And I don't have to lose sleep over either of them. So I know, okay, you know what? I go in overnight. We have a huge move. Great. It'll look very nice one way or the other. And, if we don't, then, okay. Not too much to worry about. I can go back to my normal, kind of routine and normal trading patterns here. So that's something to take a look at there if you're itching to get heavily involved here. I know there's some very strong opinions out there, bullish and bearish. We heard one of the Fed governors come out today and say the economy was showing signs of overheating. and I just shook my head, and I had to go to the transcript because I couldn't believe it that it would make that comment. And then I looked at the rationale behind it, and okay, made sense. It was all jobs related, right? Everything he talked about was based on jobs. And yes, if you're going to base economic ups and downs based on jobs, and where the economy is based on jobs, yes, there is some sign that it's overheated. But jobs has historically been a lagging indicator, not necessarily a leading indicator. So, not one that the market's going to take huge comfort or solace in with it. Okay. Now, I did not continue with the 30 indicators in May series here today. We'll continue with that tomorrow. We'll go and take a look at two different indicators here tomorrow. I want to have I want to use indicators, right? I have the 30 indicators that I'm going to talk about. But I want to kind of correlate that to what's going on in the market. So indicators that are actually doing something or showing some things, during that time period. So we'll take a look at two of them tomorrow. I suspect we'll get a chance with the commodity channel index. So I want to go take a look at that. Also think we might get a chance with the Williams percent R or with the on balance volume. To take a look at a few things. There's some interesting stuff going on right now with the tricks, and it's very much a momentum indicator. So we'll see kind of how things shape up here tomorrow, and we'll go take a look at two indicators. If you want to check out some of the earlier videos done this month, just go back into the archive, just type 30 indicators in May. It'll bring them all up there for you, and you can go back and we've talked about the Bollinger Bands and the ADX and the RSI and the stochastics and some of those older indicators that kind of built the platform for technical analysis out there in the markets. Okay. All right. Tomorrow, is the market really watching the economic data? No, not really, right? But we do have some, and it is one where I don't think it's data where you can look and you can say, well, this is going to be the market driver. It just isn't. But it's data that is going to go into fund managers, banks, and it's data that they will make decisions on as we get into next week. And that is the CPI or the inflation data. Remember we talked about the last time the Fed came out with their statement last week, that as we go forward, the market is going to be looking a lot closer at inflation data than what it has over the last couple years. And I do think inflation data is going to be a big deal in terms of, what Fed policy is, inflation data in politics anymore. But that's an important number for the markets. I don't expect it to move the markets tomorrow, but I do think there will be implications as we go forward. In the same way as the Chinese inflation data that we saw earlier this week. Wednesday night, the inflation data came out. Okay, it took off some of that kind of fear factor drop that had come in the month prior. But not exactly ripping it up when it comes to the numbers. I suspect we'll see something similar here tomorrow with it. But we had the PPI data here this morning, right? Most people don't you don't see it a whole lot in the conversation today, but it missed on the headline month over month. But the less food and energy also missed there, and it's just one where the Fed is going to be in a position where they can cut rates if inflation continues to stagnate and try to drive things with some rate cuts. Now, you combine that with what we have seen in the bond market this week, which is kind of disastrous in a couple ways. The demand for bonds this week has been really low. Some have blamed it on China, but when you look at the data, the foreign buyers, they're still fairly strong, and most of it does consist of China. China. So it's a very interesting mix we have going on right now there with inflation bonds, the Fed, and it's just kind of that wall of worry just building, starting to build rather than starting to crumble, and we'll see if that carries on as far as that build with the news that we get here tonight and the news that we get here tomorrow morning. Thanks for hopping on. Have yourselves a fantastic evening, and we'll talk to you tomorrow. Take care.